Hey folks, glad you could join us on another conversation on Business Redefined. This is your weekly most comprehensive look at the world of business, finance and economics. The budget season is upon us. We have seen the budget policy statement being tabled in the House. We have seen the medium-term debt strategy being tabled as well. And we want to begin our conversation on these key subjects. And we are privileged to have on set the partner in charge of tax and legal affairs at PwC, that is Job Kaboshi. Karibu sana.
Asante, Julians.
Not too far back, I think about a fortnight ago, so we had this communication coming from the National Treasury that one of the key tax heads, which is value-added tax, in the first half of the current financial year, that is between July last year and December, missed target by 37 billion shillings. And many Kenyans have been asking me this question. What exactly informs VAT losing the target by such a huge margin? First of all, were you surprised by the number, and what do you make of it?
Yeah, so thanks, Julians. I guess you need to go back to the basics of value-added tax to start unraveling the story, yeah? Because VAT is a tax on, the supply of goods and services, or the selling and buying of goods and services. And as a direct result, if you then have a constrained environment where the buying and the selling of goods is not happening at the pace that was envisaged when the government was setting the budget, then you can actually expect that there will be a reduction in the collections. So, and at the same time, you also need to take into account that this so-called missing of target year on year is coming from a year where we had significant increases in the amounts that we were able to collect in the form of value-added tax. Just to give you the numbers, if you go back to the year 2023-2024, VAT collections, I think, for the year or similar period was around 272 billion, yeah? And the year after, it then moved to 314 billion. So you can see that significant jump, yeah? So if you then question yourself, what has then changed in terms of the macroeconomic environment that would then drive another significant jump in a subsequent year, then you fall short. This is an environment where households, yourself, myself, finding it difficult to spend, because if you're on a pay slip, the amount of deductions against your pay slips keeps on increasing. From the housing levy to now the contributions to the social health. At the same time, if you're a corporate, then you're interacting with the government, then you're getting into a space where there's delays in the settlement of bills. There is a reduction in the number of projects that the government is actually engaged in. If you think about the recent past, we don't have significant infrastructure development projects, which actually then mean there is spending in the raw materials, the equipment that is actually going into those projects. So when you don't see that happening, then quickly you then expect that there would then be that reduction in the collection of transactional taxes like value-added tax. So to answer your question, am I surprised by the trend? No. Maybe the quantum, yes, but I guess, like I'm saying, it was an aggressive expectation by the government to collect the amount that they targeted in a tough economic environment.
But Joe, market watchers like myself would have anticipated that because of the rollout of e-teams, for instance, KRA is granted a lot more visibility when it comes, especially from a VAT standpoint. We would have anticipated that from an administration standpoint, then they are tightening the loose ends and being able to squeeze out whatever leakages there were to be able to boost collections. It doesn't seem to be playing out.
I think I guess one needs to step back, because it might be a tough indictment on whether e-teams is actually working or not, yeah? I think for sure, like I mentioned before, if you look at year on year, the revenue collections from a value-added tax perspective keep on increasing. Yeah. And especially the 2023-2024 fiscal year, a significant jump. And a lot of that is then attributed to the introduction of technology. In this case, the electronic tax invoice management system, when it comes to enhancing compliance on a tax like value-added tax. Yeah. But remember, all you're doing is dealing with the administrative part of the tax collection process. You still need to drive the economic growth to then be able to sustain your collections.
Yeah.
So e-Teams, I would say, has had an impact, visibility that the Revenue Authority is getting as far as the transactions are concerned. Any trading partner you engage with will be asking for an e-Teams compliant invoice.
Absolutely.
Because in the current environment, it's not only affecting value-added tax, but remember, effective January this year, you won't be able to get your deductions for corporate income tax as well.
Yes.
So it's basically working, but then you're then still managing a small pot of revenue collection. So yes, if I think about it from a medium-term revenue strategy for the Revenue Authority or the National Treasury,
Yeah.
they're talking about enhancing collections through, I guess, transformation and digitizing the collection. And that's actually one bit, because the other element then they talk about the broadening of the base.
Yes.
So I think we're getting it right, for sure, in terms of e-Teams and the compliance that we are getting. But unfortunately, I think there's still room for growth in terms of the taxation base.
Okay. And Job, now that you've touched on the aspect of Section 16(1)(c) of the Income Tax Act, that is, you won't be able to claim as long as it is not backed by an e-Teams generated invoice. One of the major changes we had in the tax laws amendment of December 2024 was to introduce a threshold and essentially aligning it with the VAT threshold of 5 million in annual turnover. And many Kenyans have asked me, so if I'm a big business and I want to do business with a small business, and they're not obligated now to issue an e-Teams invoice, and here I am, I want to claim, how will that work? How do we reconcile this, Job?
I think it's a journey, and I think one of the challenges we find in this part of the world, and not only in Kenya, I think we are quick to adopt to change.
Yeah.
So if you think about the revenue authorities across the African continent, they've embraced technology as a way of enforcing compliance, monitoring compliance, and getting data that actually informs policymakers' decisions. Yeah. But unfortunately, sometimes we don't step back to basically ask ourselves, what does this actually mean in terms of a trade, for instance, or doing business? Because like you rightfully say, if you then impose this obligation on small businesses in 1 month, in a couple of months, then you say, you know what, I've introduced a threshold, therefore they fall out of the net. But you've not then addressed me, who's actually as a business who's interacting with the small and micro enterprises who are now below the net in terms of my own deductibility. Then you leave me in a situation whereby I will be cautious when I'm then interacting or trading with parties that may cause me a difficulty in claiming my deductions, because if I'm not able to claim my deduction, it means I then have a higher tax bill. Yeah. So in essence, I might be forced to go for well-established businesses which are then not below the threshold. I don't know, and I would need to check on this, whether there is an opportunity to exempt in. So I'm falling below the threshold. Can I?
But I wish to.
Yeah,
yes.
Because I need to do business with Julian's, or need to do business with PwC. And the PwC is saying to me, if you're not able to issue me with e-Teams compliant invoices, then I'm not going to do business with you. But I think there is also the question of just the educating of the taxpayer, because if you've introduced then the threshold, then it should follow that systems like your iTax then are set up to then recognize certain, I would say, PIN numbers that are then falling below that threshold, and therefore by extension then you have an ability to deduct.
Good point there, because many guys are asking, so who has the burden of proof that actually this threshold was met or not? Yeah. You touched on something which I think is very important, Job, and that is the conversation around widening the tax base. And this is a conversation this country has year in, year out. And maybe not just this country. If you go to Nigeria, they are under tax reforms. Currently, Zambia, same story. And the question is widening the tax base. One, taxing the digital economy. Where's the sweet spot here, Job? Because we had DST, now we have significant economic presence tax, and we seem to be groping all around the place trying to find exactly how do we go about this work.
I think again it goes back to what I said. We are very early adopters. Yeah. So if I think about, say, the taxation of the digital economy, like you've highlighted, and say from a value-added tax perspective. You know, continents like Europe are still grappling with how to go about it. I don't know whether you've heard about the concept of VAT in the digital age. So similar challenges in that part of the world, because we've gone from where we're talking about, you know, globalization of the economy to where we are now focusing on localization of economies. A good example is what President Trump is doing in the US. So in terms of the sweet spot, I guess is this urge to make sure that nations are then receiving fair amounts of taxes for trade that is happening in their economies, yeah? So the whole taxation of the digital economy is appreciating that there is, because this is targeted at non-resident businesses. Because local businesses or resident businesses will be captured by our normal domestic taxes. So when you then are interacting with businesses that are not necessarily established in your country, and they are then extracting revenues from your economy, then there's a desire to then want to tax that economy or get a fair share of whatever they are earning from your economy. Now, the VAT on the digital economy or the digital services tax have been introduced to try and address this. But at the same time, remember, we are then interacting with other nations. So whatever rules are introduced, and I think that is where we are, a lot of countries are then grappling with the taxation of this economy, because you could then end up in a situation whereby you get a retaliatory response from your trading partners. And at the same time, you find that these taxes or countries that are less developed like ours, vis-a-vis more developed economies, you know, your US, your Europe countries, UK and the likes, where a lot of these major players in the digital economy are headquartered, are then being seen to be extracting revenues probably unfairly from markets like ours. So we are quicker to react, and therefore that's how come you've seen this oscillation between the VAT in the digital economy space, the digital services tax. Now you're talking about the significant presence, you know. So it's just that attempt trying to get to what you're asking me, the sweet spot. I really don't know because I do have views on how this has been implemented. You know, when you talk about thresholds, and then you then say whether I've interacted with a Kenyan consumer on one transaction alone, then I fall into the net that requires me to register for VAT. Then that doesn't really add up. So you then start getting to a point where should we be having a threshold? How do I enforce? Because at the same time, even as you want to get everyone into the net, there is almost compliance based on goodwill. Because remember, part of the biggest challenge with this economy is that you do not necessarily have an office that you can walk to or a bank account that you can issue an agency notice to enforce. So I think it's a journey. I think we're seeing that happening in other parts of the world, like I mentioned, Europe, still grappling with how to actually implement the VAT in the digital age. And there's that question around, first of all, do you have technology that is going to be able to assist you collect the fair amount of taxes? Do you have the right data? So if I, as a business located in a foreign country, tell you that I've only transacted with 10 customers in Kenya, can you verify that?
Exactly.
So those are some of the challenges. But I would say it's a journey. It's in the right direction. A lot of countries are grappling with the same kind of a challenge.
You touched on something which last week I did an opinion piece in the Business Daily, and I was arguing that could the Trump tariff escalation spook Kenya's efforts towards digital taxation? And I was talking about largely significant economic presence and minimum top-up tax, because if you read his executive order number 1, it says that we will scour the world and look at tax jurisdictions and which ones could be mishandling our businesses. And some Kenyans told me, dude, you're overthinking about this thing. I don't know, Job, what you think. Could that put Kenya in crosshairs? Significant economic presence tax and minimum top-up tax?
I think it's good to think, but I guess some of the thinking, you know, you also need to take into account the kind of an economy or the size of an economy that we are as Kenya. If you've seen the President Trump's, tariff conversation. It's targeted to major economies that have, business ties with the US. Yeah. So I think we probably are a bit shielded, but definitely worth thinking about. I think we are net consumers of, the services that we were talking about, whether it's a digital economy service, digital economy services or services offered through the internet. Yeah. So it would be more us, I guess, that whole conversation around trying to get a fair share of our taxes. Yeah. So, there is always going to be a market for, companies in the US in this part of the world. So I think whilst we're thinking about it, I don't know that it is one that we should be losing sleep over at the moment. Okay. Obviously, it is important that we are then thinking about whether we are, there is an unfair extraction of profits or revenues from this part of the world. But I think probably not the biggest agenda item for us as a country.
Okay. If you read Kenya's medium-term revenue strategy, one of the indications that is there is that progressively we should see rationalization of the first and second schedules of the VAT Act, and that is zero rating and exempt status. Sure. And the whole idea is to address this challenge of tax expenditure. Given what we have seen so far, Finance Act 23 and the Tax Laws Amendment Acts that are now in force, I wonder what you anticipate as we look into Finance Bill 25 in terms of that rationalization.
Yeah, a good question, Julian. So I think one goes back to why, I guess, a first schedule and the second schedule exist, or why exemptions and zero rating exist in a VAT legislation. Yeah. So you'll find that it is mainly to protect certain vulnerable parts of the economy, or to try and incentivize or grow a certain part of the economy. Yeah. So if you go to the zero rating schedule as well as the exemption schedule, you'll find it will be services like in the education sector, the healthcare sector, basic food stuff that is actually either zero rated or exempt. Yes. Yeah. Interestingly, you then start finding things like the energy or renewable energy driven goods and services also then tend to fall in there. Over the last couple of years, and what we've seen is that there's been a deliberate effort by the government to limit the number of items that are actually falling into those categories. Yeah. So you then leave it to the basics, like I mentioned. Yeah. So one then wonders, the headroom which the government then has to keep on shrinking these schedules, I think keeps on dwindling. 2 or 3 years ago, we had, the fuel actually moved from being exempt to the 8% to the 16%.
16%, yes.
Yeah? So now we then start having conversations around, education. How can you narrow down such that you're then limiting exemptions to the basic education that is offered by primary schools and maybe secondary schools? And then leaving out things like vocational or like
swimming and
those kind of things. So I would expect that there would be maybe those kind of attempts to try and define or split certain types of services. If anything, one of the ones that have been talked about as potentially getting into the VAT net is financial services.
Correct.
Yeah.
Yes.
So when you think about financial services, whatever.
It was even in Finance Bill 24.
Correct. But you now start getting to a point where you then question whether we've fully thought it through.
Yeah.
Because remember, a lot of these financial services attract excise duty.
Yes.
So if you're then attracting excise duty at the rate of 15%, and then you're talking about adding a 16% in VAT, you're then talking about transactional taxes of upwards of 30, 33, 35%. What happens? You then quickly start changing people's behaviors.
Yeah.
In an economy where we've slowly moved from a cash economy, people then start questioning. I sat in a conversation where the dinner conversation changed to how much are we spending on the
transaction charges.
Transactional charges, whether it's a banks, whether it's a mobile telephony companies that are supporting this kind of economy. So you start questioning it as an individual, and then you quickly start getting to a point where it can actually change behavior. So I would say I expect there to be attempts to keep on tightening and reducing the amounts of zero rating as well as exemption. But in my view, I think the headroom is slowly starting to shrink.
I see. Many Kenyans rather have asked, increasingly, if you look progressively at our finance bills over the last 5 years, there's a shift towards focusing on indirect taxes, easy administration, low costs, etc. But what about the progressive conversation around the canons of taxation? A tax structure should be progressive. Because if we are targeting more indirect taxes, Job Kaboshi earns his millions, Julian Samboko is getting his 50,000, and we are being slapped by 16% on something. It's not the same. What's your take, Job?
Yeah, I've been practicing value-added tax for quite some time, and I keep on hearing that value-added taxes or indirect taxes are regressive, and you're right, they don't make a distinction between ability to pay. So, and a good example is, like we introduced a VAT on fuel. Yeah. So if you play it, in your mind, who actually gets to spend on fuel or petrol or petroleum products? It will be the Julians driving the fuel guzzler, or the border transporter, or the mobile, what do they call them? The hailing,
taxi hailing
app drivers. So there is a very huge array of consumers of petroleum products or fuel, but the same rates apply. Yeah. So you're right, it doesn't make that distinction. So whilst indirect taxes are, like you say, they go to taxes for a lot of governments at the moment, and it's because of what you actually mentioned. They are easy to collect. You appoint the taxpayer or the buyer of the goods or services, in this case a business, as an agent, at no cost. Yeah? so it makes it that businesses are actually being forced to have a lot of disclosure and transparency with government or with the revenue authority. If you follow the story, they started off with, we talked about e-teams, yeah? Yes. So e-teams envisages that you're actually reporting your transactions on a real-time basis to government. Yeah. So that transparency the government enjoys. At the same time now, with that transparency and the investment in technology, iTax is now able to pre-populate and prepare a VAT return for you. Yes. So the government is saying, you know what, I'm going to make it easy for you to be my agent. So if I go back to your question, I would say the regression in indirect taxes is there, and that then calls for critical thinking by policymakers, even as you're going to this easy to collect taxes. So the conversation we're having around, say, VAT on financial services, well and good, you can introduce it. But what does it actually mean for the general population that you're talking about trying to include from a financial services perspective? So I think it could cause certain behavior changes. Yeah. But you know what? It's a general trend globally that indirect taxes are favored by governments just because they are easier to collect, have a wider reach. And on that basis, I guess the government would say they are efficient from a revenue mobilization perspective.
For sure, and they have a wider cast in terms of their net. Job, you've talked about the VAT prepopulation, and I always sit back and I wonder, is the prepopulation of the PAYE returns within sight? You're thinking, and I know you don't hold brief for the Revenue Authority.
I don't, and maybe it's in the offing. I think I wouldn't be surprised actually with the kind of direction we're heading from what technology is able to do, and us adopting whether it's artificial intelligence and all these capabilities that the business as well as the Revenue Authority is embarking on. And to the extent that I'm able to, prepopulate, what my gross pay is quickly, you should be able to estimate or calculate what deductions go against that kind of revenue. I think it's partly done because remember there is what the employer is supposed to file with the Revenue Authority in terms of what was paid during the year, what were the deductions. And then the question is usually around what are the income streams that your employer perhaps doesn't have visibility that you then need to then go and include in your return. So I would say it's partly there, and it's just that visibility of what your whole collection of revenues that should be subjected to taxation might not necessarily be visible to the employer or even the revenue authority. So it calls for a lot of trust and I guess integrity on the part of the person who's actually earning that income.
Okay. One of the items which has really shaped discourse in this country around public finance and tax specifically is the national tax policy. In your own assessment, how do you feel we are progressing around the national tax policy as a guiding framework around the tweaks we normally have annually around taxes? And I'm asking that because following what we saw in June last year, 24, of course there was a disruption in terms of the implementation matrix. But by and large, do you have confidence that we are on the right path?
I would say yes, we are on the right path. I think the question would be at what pace. So on the right path, I say that because remember, we've over the years talked about a national tax policy. We did not have that. That we've been brave enough to actually articulate it, put it in a document, make it available to the public and potential investors in this country is a good start, yeah. And then it has, you know, the checks and balances, the guardrails that we are then aspiring to as a nation when it comes to our fiscal environment. I think the challenge is, you know, you could have that framework, but then if you want to implement everything that is contained in that framework all in 1 year, or then implement it and quickly go back and try and change that the following year because you do not allow enough time to test it out. So I think in principle, in the right direction. I think sometimes we do panic and then implement some of these changes too drastically. I think it is important to actually gradually keep on, you know, walking that journey towards, and especially when you read the national tax policy together with the medium-term revenue strategy. Because the revenue, the medium-term revenue strategy is what, a 3-4 year plan. You know, you then need to then incorporate it into the big master plan. So I think that's a challenge. So you talked about the VAT in the financial services sector. So this was in the bill of 2024 that never saw the light of day. But should that have, you know, there was a lot of questions around what was actually covered when you say you want to introduce, because there is a whole listing of financial services that are exempt from VAT. Do you need to go and introduce VAT on all of them at the same time, or do you then want to like keep on implementing over that 3, 4, 5 year period and actually get to see the reaction of the economy to these changes? So I think good agenda. I think the pace of which might need to be looked at, and at the same time, you know, like just phase it out. I would say. 2
final questions, Rob. Sure. So first is many Kenyans ask me this question: have we lost the spirit and philosophy, if I could call it, around excise? Because as something which is ideally meant to be a sin tax, we see it in products where we start asking questions, like financial services, as you said, bottled water, etc. Where do you think we are placed with excise? I don't know. I guess whether we've lost the plot, you asked. I think increasingly, you're right, excise duty has become a mainstream tax. You know, historically, you'd wait for the budget presentation because there's going to be an announcement about the hike in excise duty on alcoholic beverages and tobacco products. But we've slowly or quickly moved away from that space, where now excise duty is a mainstream tax. One would wonder what is a sin in consuming airtime or consuming bottled water, and we could have a debate whether, you know, when one looks at excise duty on water, for instance, and you think this is a luxurious, product, do we have enough clean water and all those kinds of conversations? So I think what has happened is that, in my view,
I think excise duty has been an easier tax for government to administer when it comes to indirect taxes. So we still want to operate in an environment where we are within internationally accepted norms when it comes to taxes like VAT, that you'll find financial services would be exempt from value-added tax. Our financial services are exempt from financial taxes. Are exempt from VAT.
VAT, yes. VAT.
But we then have excise
on the other hand.
And when you then have, whenever I have conversations with my counterparts elsewhere in the world, they're like, sorry, you say excise duty on financial services and, on airtime. So I think it's just that, the revenue mobilization agenda has pushed us into that space. And that's why it is actually very important when you're then trying to, shift changes in the VAT legislation, where you're then saying there are certain services, there are certain goods which are not taxed. From a VAT perspective, you'll find that they are likely taxed from an excise duty perspective. And the rates are not low, because on the financial services, we are looking at 15 upwards of, to the extent of 20%.
Correct.
So I think it's just that it has been an easy to go to tax, but you're right, it has ceased to be what it was in the past, that it is a sin tax aimed at addressing certain ills in the society, or certain products that were viewed to then have adverse effects on the population. If you think about maybe sugar-added products or the alcoholic beverage product, they then have an impact in the sense that government would then have to spend in healthcare. So I have to try and make these products less affordable and hopefully drive less consumption to manage another element that the government still has to grapple with, in this case, healthcare. But for us, I would say excise duty, for all intents and purposes,
it's a mainstream.
Is mainstream indirect tax for government.
Final question, Job.
Yes.
Kenya's conversation around widening the tax base often is couched in the sense that we have a vast informal sector. And if you look at our other jurisdictions, they're beginning to ask themselves whether the cost incurred in targeting this vast informal sector will actually justify the tax yield. And many are beginning to take a contrarian view, Nigeria being a good case in point. I wonder what your thoughts would be around this issue.
I think we might have attended a session together, because when you talk about the Nigerian situation, I know an individual who's very passionate about whether the informal sector is adequately or rightfully taxed. I think part of the answer to your question would then stem from addressing whether the informal sector is contributing its fair share to tax collections. I think there's a narrative that almost suggests that perhaps they are not, which might not necessarily be accurate. Remember, we were talking about the situation with the boda rider, who, similar to you, when they drive into a gas station and fuel their boda, they are having to pay excise duty and the fuel levies that you and I are paying, because we drive vehicles. The mama mboga, when she buys her airtime, or when she's getting paid using the send money options that are offered by a lot of the telcos, there's transaction charges on which there is excise duty and VAT being levied. So I guess one needs to step back and ask, what taxes are you really looking to collect? Because part of the challenge that we were finding in indirect taxes being regressive is that it actually then is not distinguishing and is forcing everyone in the economy to actually account for the taxes. So if you then, like I'm saying, you need to step back. What taxes are you really looking to collect? Is a tax that we believe we are missing the income tax? Perhaps yes. Then you then say we are missing income taxes because it's a self-declaration, and maybe a big quota in our society are actually not taking that initiative to go and self-declare. But at the same time, like you said, canons of good taxation dictate that it needs to be efficient, easy to collect for the revenue authorities. So I think there is maybe a misguided perception that that sector of our society is not contributing enough, and should they really necessarily be accounting for income taxes if they're actually contributing as far as the indirect tax contribution is concerned. And like we were saying, indirect taxes are now the taxes that are favored by government.
Correct.
So you should just let it be, let the system work, make it, And yeah, you're right, because unless we want to box the taxes and say, you know what, I've collected pay as you earn, I've collected income tax, I've collected indirect taxes, VAT and excise. Maybe the question that we should be posing is there a fair contribution from that informal economy? Yeah? And like I'm suggesting that they are contributing because everyday services that they're using, everyday goods that they're using, in my example of the border rider, the mama mboga and the airtime or the sending of money, there are transaction charges which attract excise duty, VAT. So they are contributing. It's just that when we try and box it to income tax, then you might then say, you know what, Mama Mboga is not paying income taxes because either she's falling below the threshold in terms of what she's willing to declare, or she doesn't actually know that she actually needs to go and file her tax return to be able to declare that income and pay taxes. So we should make it easy. I agree with you from an efficiency perspective. Maybe we are not applying our minds where we should. It's then a case of then dealing with that whole issue of regressive nature of indirect taxes, but then ensuring that everyone then is contributing. In my view, they are contributing. Then the question is maybe we want it to be income tax as opposed to excise duty or VAT.
All right. Job, unfortunately, we have to close it at that point.
Sure.
Thank you so much for your time.
Thank you, Julians.
We have been having a conversation with Job Kaboshi, partner in charge of tax and legal services at PwC. We have been covering a raft of issues largely on indirect taxes and the state of the economy where we are and why we are seeing the sort of trends we are seeing with VAT and excise and the likes. Remember, in this budget cycle, we shall be breaking down this and a lot more, so stay tuned.